Good day, viewer. You are welcome to Business and Finance here on Eco Television International. I am Rachel Tanzi. Thank you for joining me today. Now, we are saying that the recent 10% increase in VAT is stirring up a lot of, comments and chaos around the country. We have opposition parties using it as the means to say that the present administration is trying to burden the citizens of the country, and also we have other organizations and union coming out to say what it means for the economy. However, this is not only the challenge, but what it will mean for individuals, small businesses, and what it will reflect on our day-to-day life as Nigerians. Whether you have a business or you're just a consumer, either way, this value-added tax affects your consumption directly. Now, we have the Presidential Committee on Fiscal Policies and Tax Reforms recommending an upward review of the value-added tax. Now, let's not forget, this is not the first time that the value-added tax is going high. In 2020, the value-added tax was just 5%. And then we saw a review that same year in February up to 7.5%. Even at that time, there was a lot of talks and complaint left, right, center, because you are going to see it directly in your bank charges. You're going to see it in your data consumption. That is what you pay to telcos. And of course, the prices of goods in the market is going to go high because now this VAT is expected to be paid by manufacturers, SMEs. Therefore, whatever will be your cost of service or cost of consumption for a product, you are going to pay this value added tax. Now, when it was 5%, we saw a 2.5% increase, making it 7.5%. Now, if it's going to be reviewed upward, it is still a proposal. If it's going to be reviewed upward to 10%, we are seeing another 2.5% increase on the present value added tax. Now, we are having the chairman of this committee stating that the committee was given the responsibility for multiple tax in Nigeria. Now, they have significant issues around in tax revenue, and these issues have to be generalized, looking at non-tax and then tax revenues. Now, the committee was set up with three broad mandates. Precisely, the first one was to look at governance, our finances as a country, borrowing, coordination with the federal government and across subnational. Now, the second was revenue transformation. The revenue profile of the country is abysmally low. If you dedicate our whole revenue to fixing roads, it will be insufficient. The third one is government asset. Now, the law we are proposing, now this is statement from Oyedele, the law we are proposing to the National Assembly has the rate of 7.5% moving to 10% from 2025. So if we have the federal government adopting this and then our value-added tax has been reviewed to 10%, we are not going to see that implemented in the year 2024. We are looking at it for the following year of 2025. Of course, they don't know how soon it will be able to pass to law. The subsequent increases are also indicated in terms of the year that will kick in. Now, while we are doing that, we have a corresponding reduction in personal income tax. Anybody that is earning about 1.5 million a month or less, they will see their personal income tax come down. Companies will have income tax rate down by 30% over the next 2 years to 25%. That is a significant reduction. So on the other side, what you're earning, the tax that is on your payment is going to reduce, while we are seeing the value-added tax increasing. Now, if 30% increase tax revenue currently for business will be able to go down to 25%, then we are looking at a 5% decrease as compared to 2.5 increase on value added tax. Now, it looks like this committee knows what they're doing, but for value added tax, this is for goods and services that we consume directly. So yes, you might feel the impact. You as a consumer, you might feel the blow directly. Now, this tax is targeted towards the common man. It's not even for businesses, it's for you, the consumer. you're buying a biscuit, be rest assured that there's 7.5. No, we're looking at 10% value added tax. You are making transfer from your bank, whether you're buying data, credit, or whatever. This 10% is going to go on your electronic money levy and transfer levies and all of that, and every other bank charges. You're using any app that needs or uses deductions of funds and all of that, for sure you are going to see a 10% value added tax. Every online transaction you're going to have, be it purchasing a thing from an online store or any transaction, exchange of goods or services, you are going to feel the impact of this 10% value added tax. And this is where I believe it might be a burden on Nigerians, because now we know that it's not everybody that is on the government payroll. So even if there is a decrease in the tax when it comes to payment, that is going to affect directly people who are under the government payroll. And we know that this is a little percentage compared to those who are not on the government payroll. So entirely, we are going to have the mass majority of the country feeling the blow of the 10% value added tax. Now, we'll keep our fingers crossed, waiting to see what this will mean in regards to the standard of living in the country. Now, fuel scarcity continues to persist, and the reason why it is making it on today's program, and we have to talk about it. Now, we might want to disregard all the back and forth between the NNPCL concerning, first of all, disagreeing or saying that it is a lie, they are in debt, and then eventually admitting the fact that they have a $6 billion debt to suppliers of petrol in the country, and the reason why it is persisting. And we know that scarcity in the availability of fuel means a complete and direct effect on the standard of living. We are looking at fuel pump price at the NNPCL. We are looking at the official market going up as high as 900 naira per liter, or we can leave it at where exactly it is 897 naira per liter. And for other distributors and sellers, we are looking, depending on the region. Now, for this price of 897 naira, we are looking at Lagos. And of course, for states that are not Lagos, the prices are different. And in some states, we are seeing fuel pump price as high as 1,000 naira. And the story will be different for black market sellers. Now, in a statement by its Chief Cooperative Communication Officer, Olufemi Soneye, the state-owned energy company subtly confirmed that the debt was the reason for the fuel queues in filling stations across the country, stating that it is impacting supply sustainability. Now, let's look at the breakdown of some of the outstanding payments that the NNPCL is yet to make and have denied it from the start of the year 2024. Now, in July, the Nigeria's debt to suppliers of petrol surpassed 6 billion naira, making the NNPC struggle to cover the gap between fixed pump prices and international fuel costs. We saw a report stating that the National Oil Company began struggling early this year with late PMS payments surpassed of $3 billion. So starting the year, there was already a late payment of $3 billion by the NNPCL. Now, the company has still not paid for some January imports. This is coming from traders, and the debt keeps piling up. Under contract terms, NNPC is meant to pay within 90 days of delivery. The only reason traders are putting up with it is the $250,000 a month per cargo for late payment compensation. This is coming from an industry source. Now, since June, Nigeria's tenders to buy PMS were smaller. So the more we are not able to purchase in the large quantity that we're expected to, or in the normal quantity of our consumption, it means that scarcity will continue, because now importation is reducing, therefore the availability is less out there. Now, for in July, 3 more traders were said to have stopped supplying PMS to the NNPC as of now, making a total of 5 unpaid traders. Now, but Soneye in August denied that the NNPC owed international traders 6.8 billion. NNPC Limited does not owe the sum of that kind of money. That was the statement in the beginning, the denial at first. Now, in the oil trading business, transactions are carried out on credit. So credit in the oil business is nothing but we saw that there's a period of 90 days for you to come through in this payment. And so far, so good. 90 days, which we're looking at 3 months, have surpassed since the start of January. And then the NNPCL is not able to pay for even some of the oil that have been supplied from the beginning of the year, and we're looking at over 180 days. So this default is on so many level. Now, the NNPC had given various reasons in the past for lingering fuel crisis, including bad weather, which I believe the weather is becoming better, and the inability of vessels to discharge, among others, but none of the measures it has taken to stop the queues at the filling station. So if truly this were the reason, then we could have seen an increase in the availability of petrol in filling station. However, this proves that these were not even reasons in the first place, but mainly because NNPCL is not able to pay what is expected to pay for suppliers to come. Therefore, some suppliers are dropping out of supplying for the NNPCL, and they have passed their 90 days grace. Now, we will just have to wait and see what the NNPCL is going to do about this, as we can see the adverse effect directly on businesses and even the standard of living of the country as it is now. And not only commuters are groaning, but every business is not finding it easy. And of course, we saw in the month of July that inflation has gone down. We are waiting for the August report on inflation, and let's see if this lingering crisis for fuel scarcity will affect inflation for the month of August. We're seeing that when it comes to leading in the financial sector for the economy and helping the economy generate some revenue, we have banks at the top. And we're going to look at a bank that have been doing exceedingly well, precisely the Zenith Bank, which have maintained its position, its number one position in profitability. Now, the Zenith Bank PLC has announced its audited results for the half year ended in June 30th, that's for the year 2024, recording an impressive triple-digit growth of 117% in gross earning from 967.3 billion naira reported in the first half of 2023. So year on year, we are seeing a massive increase from 967 billion for the year 2023. In the first half, we are looking at 2.1 trillion naira for the first half of 2024. So yes, we are looking at a massive increase of over 117%. This superior performance has been achieved even as the Nigerian banking industry navigates a challenging macro environment alongside recapitalization, where we are seeing that Zenith Bank is also leading in raising funds for the new recapitalization coming from the Central Bank of Nigeria. According to the bank's audited half-year financial results presented to the Nigerian exchange, the triple-digit growth in the top line also drove growth in the bottom line, as the group recorded a 108% year-on-year increase in profit before tax for 350 billion naira in the first half of 2023 to 721 billion naira in the first half of 2024. Profit after tax also grew by 98% from 292 billion to 578 billion. So even after tax, Zenith Bank is seeing massive profit. This led to growth in earnings per share by 98% from 9.29 in the first half of 2023 to 18.41 naira in the period under review. The growth in gross earnings was driven by an acceleration in both interest income and non-interest income. So we are seeing that the bank doing very well, not only with interest, but even in other things that are put in place that doesn't have anything to do with interest. Propelled by the growth of and by the effective pricing of risk asset, interest income surpassed the 1 trillion naira mark, a half-year record, growing by 177% from 414.4 billion naira in the first half of 2023 to 1.1 trillion naira in the first half of 2024, while non-interest income grows by 74% from 515.7 billion naira to 899.3 billion naira. Now we can say kudos to Zenith Bank, but it is not the only bank thriving in this financial year. We have the Stanbic ITC doing very well. We have the GTCO. We also have the First Bank Nigerian Holding. We have the UBA doing great. We have many banks that fall in this category, but of course Zenith Bank is remaining number one. And for the financial institutions, we are looking at microfinance banks, so obviously they are not leading in revenue generation for the economy. So far so good, and we have every other financial institution, but then we see our banks, direct money deposit banks, precisely doing better in the race for helping the economy generate more revenue. We've seen a lot of problems. It is not just for the year 2024, but we can go on back to so many problems that has been going on concerning fundings that have been put into the power sector and nothing to show for. However, the federal government is not tired yet. They are out there seeking investors and also willing to put in their own funds into the power sector, and we're seeing that the federal government is ready to invest $800 million in the power sector. The federal government said it was concluding plans to release $800 million under the Presidential Power Initiative (PPI) to significantly enhance the government's effort at revamping the country's power supply nationwide. Specifically, the Minister of Power, Chief Adebayo Adelabu, stated that the funds will be utilized for the construction of electricity substations and distribution lines under the PPI scheme, also known as the Siemens project. Adelabu, according to a statement from the ministry, spoke during a facility tour, TBEA Southern Power Transmission and Distribution Industry in Beijing, China, while attending the China-Africa Cooperation Summit. So this happened recently. The PPI deal with the German government aims to modernize, rehabilitate, and expand the national grid by investing in the electricity value chain, including generation, transmission, and distribution system of the power sector. Now, these are all the places we are struggling. We always have low power generation in the country, and while we keep having grid collapse, we keep seeing a very low amount of megawatts being generated. And the reason behind some of the power outage we keep facing in the country. So we have to look at power generation to be able to minimize power outage. And importantly, more substations, so that we won't just have power generated from one place. Looking at the grid collapse, which we know, of course, is as a result of this power plant needing massive attention. So, of course, this $800 million will go towards these areas. Now, the money will ensure the construction of substations for Lot 2 as well as substation and distribution lines for Lot 3 at a cost of $400 million each. Lot 2 covers Benin, Port Harcourt, as well as Enugu distribution companies discuss franchise area, while Lot 3 covers Abuja, Kaduna, Jos, and Kano discuss franchise areas. So these are all the areas that is going to cover when it comes to this project, and we're looking at 400 million each. So Lot 2 is getting 400 million, Lot 3 is getting 400 million, a total of 800 million, and we have seen the states that is going to cover. So we are seeing that Abuja, Kaduna, Kano, and Jos, which falls under Lot 3, is also going to see this funding. So we're looking at areas in the middle belt getting better power supply, and also going down to Enugu, Port Harcourt, and Benin, and all of these cities across. So yes, we are going to look forward to seeing how this unfolds when it comes to power generation and distribution in the country. 800 million is a lot, and we just hope that 5 years from now there will be no probe concerning money invested into the power sector and nothing to show for. A lot is unfolding in our Nigerian exchange market, Forex precisely, and we are seeing that volatility and profit taking is not favorable at the moment. We're seeing a downtake or downturn of 1.22% for the month of August. So this is the August 2024 report. Now, volatility in the Nigerian economy and profit-taking activities by investors have been attributed to the bearish performance witnessed on the floor of the Nigerian exchange. So we know the bullish season and then the bearish season, where we are in the bearish season now for the month of August. So we are seeing a fall. If it was bullish, we would have seen an increase. But the bearish season is more like a fall season where prices keep going down. After a bullish performance in the first half of the year, the first 2 months in the second half of the year have seen the NGX perform dismally. So we are in the bearish season. The NGX recorded a 33.81% growth in its all-share index to emerge as the best stock exchange in Africa for the first half of the year. The first half of 2024 was a bullish period for capital markets worldwide, as there was a general upward trend. African stock markets were not left out. Every stock exchange in Africa recording growth. So it wasn't just the NGX that was having a bullish season at the beginning of the year, and now we are seeing the drop currently for the NGX. Now, if the first half of the year was bullish for the NGX, the performance in the second half so far has been disappointing. That is bearish. At the turn of the second half of the year in July, the NGX posted a 2.28% decline as the all-share index moved from 100,057 at the start of the month to end the month at 97,774.22. During the month, half-year earnings results were released, with many companies still reeling from the impact of the naira devaluation in the first quarter of the year. So if we saw a bullish season from the beginning of the year, and towards the ending of the year we are now in the bearish season. Now the major reason is the devaluation of our currency. During the month, which was described as one of the worst months in the year, 42 stocks recorded gains while 57 stocks posted decline, with 41 stocks recording no price changes. So where you're seeing 42 stocks only gaining, and what is the percentage of the gain? That is another question to ask. And we're seeing 57 stocks not gaining at all, and 41 recording no price change whatsoever, remaining in a stagnant position, right? Either going down or up, nothing to say for it, just where it is. And we're having over 57 declining. Then we are having a bad month. We had a bad month for the month of August in the year 2024. Now this downward movement, however, continues. So we'll have to wait for the reports from the NGX concerning the stock exchange and the market for September. So far, the bearish season is going on, but we do not know how long it will linger, if we are going to see it for the rest of the year, or we will soon be encountering a bullish season in the Nigerian exchange market. Thank you so much for staying to the end of Business and Finance with me today. Till I come your way again, goodbye.